Hey there traders, welcome back to our channel, your go-to destination for price action analysis. In today's video, we're diving deep into our SPY S&P 500 price action analysis, specifically focusing on tomorrow's overall direction, uncovering any potential trade opportunities, not just in the S&P 500, but in the S&P 500 sectors as well. So let's waste no time and jump right into our daily analysis. For those of you new to trading or in need of a refresher, the SPY tracks the performance of the S&P 500 index, which is a wide range of the top 500 US stocks from various SPDR sectors. Alright, so what have we been seeing lately? We saw a breakout above 420.73, and from there we saw a major melt-up operation once the RSI got above the 70% melt-up, triggering the melt-up operation. We topped out at 429.67, establishing resistance there, and into today's trading session, we further established the resistance that was created right over here at 426.75. So we created a blow off the bottom scenario, trapping some bears, as we can see on the 5-minute time frame, creating support at 426, and then for the rest of the session we held above 426.75, which is the previous support, and right over there printed triple bullish hammer reversals. These candlesticks are very powerful, the most reliable reversal candles. We have three bullish hammer reversals printing there, and this is what it means to have a bullish hammer reversal form at support. So the hammer, also known as the bottoming tail candlestick pattern, is one of the strongest and most reliable bullish reversal candles. They appear at the bottom of downtrends, signifying a bottoming process, and also take place at support or higher low structures, signifying a bullish reversal. So this is what we are seeing here, and we took that trade just going into the closing session with our members on Discord, and we did really well. So going into tomorrow's trading session, now that we held support at 426.75, what is going to happen next? We are inside of this base zone, and what's happening inside of this base zone is basically a cool off or a digestion phase taking place, basically cooling off or digesting this massive large move that we had here. So we are no doubt overbought. However, bulls remain very strong, and since we held support at 426.75, it looks like we are heading towards resistance here at 429.70. So there are a few ways this can play out going into tomorrow's trading session, and we're going to look at the opportunities that you can take. So the first one is, if the market doesn't gap up, right, there's a very highly likely chance that we will gap up to 429. We will just end up gapping up above 429.70 and opening the trade session there. The reason why it would make sense to open the trade session there is because this is a resistance of the zone, and opening above it is a really good way to not only trap but also trap more bears that will think the gap will be filled to the downside here back down to 420. Now keep in mind, team, bears getting trapped tomorrow means bulls can short squeeze it above 429.67 and break out in a bull flag, similar to how Tesla did just into today's closing session, as you can see on this illustration here. But yes, team, as long as bulls hold above 428.45 tomorrow, as long as bulls get above this level at 428.45, or even if bulls do gap up above 429.70 and they come back down to retest 428.75, turning it into support and clearly show demand there, then I'm going to strongly anticipate 429.70 to be taken out, with bulls heading towards 431.81, 86 really, really fast, and heading towards perhaps for 432 and 433, creating a blow off the top scenario right there, topping out for the FOMC week, and basically selling off from there, where we believe we will get a major correction back down. So our target is 432 going into tomorrow's trading session. Now, do keep in mind, team, you can be a bull here, right? You can be a bull above 428 with a very firm, non-negotiable stop loss at 426.75, which is the low support of the base. As long as price action does not break below 426.75, they can head towards 431, 433, where you can basically profit from this move up. Now, keep in mind, team, you can profit by trading the levels that we discussed, which is the first one at, we want to see strength above 428.45, and then strength above 429.70, which is the confirmation towards 432 and 433 area. But yeah, team, now that we looked at the S&P 500 levels, and we know that bulls can continue to push it higher. Since the market is in an uptrend, it will continue until it's not. So above 426.74 tells us bulls are still in control and are in the resting zone, and above 428.60 tomorrow tells us bulls are ready for the next leg up to towards 438 area. Remember, an algo system trading will only liquidate its bullish positions on stocks and other longs when SPY price action has broken below 426.70 support. Now, if bears can get below that tomorrow and bulls stay up above 428.60, which is this range around this level on the upper level around here, trading just next to this wick right here, then this is very, very bullish, and they're going to take it up to 432 area. So if this does happen, team, then you can anticipate the overall market and those stocks with momentum that held with strength today during the pullback and at key levels to continue advancing higher at the opening session. If you are a trader that's preparing for FOMC rate decision going into June 14th, if you want to plan ahead of time like I am doing, I'm basically buying puts on some of the tech. The reason why I'm buying puts on some of the tech is because we strongly believe that there's going to be a rotation on Meta for one. So we believe that Meta is going to get a major correction back down due to its far too overbought levels. We have been going up consistently from all the way from $88 to now $274 with no real pullback, and we believe the price action is clearly topping out. You can see we have a doji candle here, and then we have another shooting star. This is all signals for distribution or topping process in place, and that price action is going to basically see a pullback very soon with heavy selling pressure. So definitely short Meta with any weakness in the market. I believe Meta is a great hedge going into FOMC meeting. We are also shorting Nvidia. Nvidia is another stock that should be shorted. We had a shooting star, which is a very bearish reversal pattern, and so far we are confirming that reversal with bears maintaining below that. And it really looks like bulls cannot seem to push up despite the S&P 500 going up. So this is very bearish so far, and we believe it is going to pull back down to 317 area. So definitely keep your eyes out on Nvidia, because this stock is due for some major pullback. This stock, I mean, it has been going up from pretty much from $108 to $419 in just 7 months, you guys. In less than 7 months, this stock has gone up this much. So it is due for a major pullback from here as the whole AI momentum simply, at least shortly, dies down. So make sure you're shorting Meta, Nvidia, and then we are also liking a QQQ put. Now, I do believe QQQ can go up a little bit more to fill that gap right here. If we can get that gap filled at 361, I'm going to be one of the happiest put buyers on QQQ for July 21st. So definitely keep your eyes out for any blow off the top scenarios on QQQ that is coming. There's a very, very great chance that there's going to be sector rotations from XLK, XLC, and those tech stocks that have been going up crazy that are going to see some pullbacks. So just to show you an illustration of how overbought these stocks are, let's take a look at the XLK. So this is the technology sector within the S&P 500, right? This is the technology sector, and this is the amount that it has gone up compared to something like, let's say, XLRE, which is real estate. You can see the sheer difference between. So if you were an investor, right, and you were investing on real estate stocks within the S&P 500, your firm did really bad. You suffered terribly, while those who invested in the technology sector within the S&P 500 did significantly well, seeing just amazing growth. And this is what the market's all about, you guys. Understanding rotation is very important. So with tech coming down, right, where do we believe rotation is going to flow into? We have discussed two places. The first one is XLF. We have been telling our team to be buying XLF, which is the financials. Rotation is strongly flowing into the financials market. You can see within this sector, and here are the stocks within XLF. So we got Berkshire, which is 13%, JPM 9%, V is 8%, MA is 7%. So what are some stocks that we are trading within XLF, the financial sector within the S&P 500? Two of our big positions at the moment is Bank of America and GS. So keep your eyes out on the financials. Bank of America, for example, Bank of America is looking really great here. We have a beautiful double bottom. We also have a base breakout there as well. We had this downtrend breakout, and so far price action is looking really great. Buyers are stepping in, and I believe going into the next few weeks, especially with this double bottom playing out, there's a great chance that Bank of America is going to come all the way back up, retracing towards this large bearish breakdown candle around 32 to 33 area. And if you're buying calls, as we have been, by the time we get to that level, we're going to be very profitable on our trade. So if you have been buying Bank of America, congratulations to you. Let's go take a look at some others. WFC is another one that we are really liking here, team. It also has a beautiful double bottom, and on the daily chart we have this beautiful rally and then base consolidation taking place, and so far demand continues to overwhelm supply inside of this base. And I believe once we do get above 41.50 tomorrow into tomorrow's trading session, WFC, which is Wells Fargo, is going to break above 42.26 resistance and then melt up all the way towards 44, and then fill the gap at 46.67 on this double bottom completion. So this double bottom is a very bullish chart pattern, and the price target is going to be at 46.65. So keep your eyes out on Bank of America, WFC. We are also buying GS, which is Goldman Sachs. Goldman Sachs is looking really great at this trend line here. It is currently consolidating, and we have been telling our team to be buying the dip, and the dip has been paying every single time. And you guys can see from all of these messages here with our team just absolutely banking on GS every single day, at least 30%. 100% on the dip buys on September 15 calls, which is just amazing. And this is just getting started, team. So once GS does break above 330, this is going to push all the way towards 341 first, filling the gap there, and then 363, retesting this downtrend resistance line. And also retesting the top of this supply imbalance candle here at 363 to 364. We believe there's going to be strong rotation going into financials, and here's why. One catalyst is that the banking crisis and all of that is going away, and then you combine that with the fact that there's a very high potential that despite us getting another rate hike this June, there's going to be something really, really good that'll be a good catalyst for banks that'll offset this upcoming rate hike, and that is going to be the Fed narrative making the statement that there will be a pause going into the July. So if the Fed does end up pausing in July, despite any sort of sell-off that we will get, which we are happily going to dip buy, anticipate major rotation coming into banks within the next couple of weeks. This will probably go on within the next 3 months. So within the next 3 months, we are anticipating the financials to go up and see significant upside from these levels. You can take advantage of this move by trading Bank of America, WFC, GS, which is Goldman Sachs, and maybe JPM and V if you'd like. But our main top three for now is BAC, WFC, and GS. All right, so another sector that we believe is going to get some rotation is XLE. So here's XLE as well. We have been discussing XLE around this trend line. And for proof, you guys can always check the market analysis and the weekly watch list. We mentioned this right at the trend line, and you guys can see that we are getting a beautiful reversal at the trend line. So XLE, which is the energy sector on the S&P 500, for XOM, which is ExxonMobil, CVX, which is Chevron. You guys, we can dip buy on these stocks here, XOM and CVX. We can buy calls for, and we can do that for the 1K challenge account too. We can buy, basically, this is a good, great strategy. And if Roger is in here, maybe Roger can look into this. You guys, if you guys,
Yes, I,
you guys are doing a great job, so I'm not going to mess with that. But for my 1K challenge, once we do it, we're probably going to do the strategy, but we will be very careful not to add more than, 2 to 3 positions at once on these swing trades, so that we can have the buying power to continue to day trade the way Roger is doing, and Roger is growing the account. So, yeah, we're gonna, but the way we're going to do it, right? We're not just going to buy random stuff that we have no idea what it's going to do. We're going to buy good stuff, such as, let's say, we believe that rotation is gonna flow into the energy, right? For whatever reason, we're gonna buy, let's say, we're gonna buy XOM or something. So if we look at XOM contracts, even for January, which is 229 days from today, like, we can buy something that's even the 130 call, right? Just to play the premiums of it. And that's really, really good, because you don't really care about the stock. You're just trying to play the premiums of it. So if you were to basically, let's say, buy this contract when it was down here at 102, which is when we, we have been mentioning XOM this past week to be dip buying XOM. So if you bought this contract at 1.50 and now it's at 2.0, this is an easy 3.0 basically. And once it reaches 3.0, that's 100% return on this contract that expires 220 days, which you got in just 10 days. This sort of return doesn't, you never see a stock go from $1 and whatever to $2 so very often and all the time. So, this is what we're going to learn through the course and everything. I'm going to show you guys what sort of reversals to look into, all this kind of good stuff. Hopefully, and this is why I really love and appreciate Roger so much, because of the contribution that he's bringing to the team. I can focus on other projects, and I can do other stuff, and that brings more growth to the team. So yeah, team, you can see contracts like that. Even now, this is a great contract. Like, you can buy the dip on XOM for the 130 call just to play the premiums of it and not even care about whether it'll go in the money or not. You're just playing the premium of it, understanding that no matter what, you're never going to lose 100% of this contract. The fact that you can make 100% and not lose 100% and traders are not taking it blows my mind. So, this is what we want to teach you guys. We don't want to do the zero DTE crap. We do want to do the zero DTE crap, but we want to do it in a way where we do it with defined risks and so forth, where our risk is defined and so forth. But, you guys, like, let's go into the swing trades. If you have been taking the swing trades, they have been doing really well, you guys. Like, even sometimes the puts are sold a bit fast. But some of the puts burnt us, and you guys, I'm not going to apologize for, or I'm not going to say, oh, I'm sorry, you guys, we got burnt on the puts. No, I want us to always get these puts, because those puts are known to be hedges for our accounts. Only one of those contracts can really save us. It can go from 500 to 1,000% and save, let's say, 3 positions or something. So those puts are a must. Tech puts at these levels are a must. We have to get tech puts. What we are doing is we're getting tech puts here while we sort of, you guys, here's what can happen. Tech can pull back and you can make your profits on tech, and then you can also be right on your rotation flow and still make money on the rotation flow. And that's 100% possible when you follow rotation flow and all this stuff. Very, very, very awesome stuff. But yeah, I forgot what I was going to show us. But yeah, keep your eyes out on XOM, team, energy sector, as well as XLV, which is the healthcare sector. So let's take a look at the rest of the energy sector. XLE. So energy sector, XOM is 23%, and CVX is 19% of XLE. So let's take a look at CVX now too. CVX, same thing, you guys. It's at a beautiful area. You can see it's about to regain the trend line, and if they regain the trend line, they're going to retest 173 first at this with this beautiful double bottom, and then if the double bottom breaks out, then basically the target is going to be 186 at this established resistance, which will finally confirm it once it retests it. So this is looking really, really great, you guys. There's a bullish divergence taking place on the daily chart, and going into the FOMC meeting, you're gonna get a rotation. So keep your eyes out on these 3 rotation flows that we talked about going into the rest of the week. So we have CVX, and I wanna take a look at one more, you guys, which is VLO. Now this one is very low weight. It doesn't have a lot of weight of XLE, but it's still one of my favorite stocks to trade. So it is very, very oversold. You can see it here, and anytime we get these beautiful consolidation bases, we get these massive rallies back up, and so far we're getting a nice consolidation. So if energy does go back up, this can go back to 124, and the contracts usually on VLO are quite cheap. And let's take a look at September, and we are expecting 124. So even if this was a premium play, you guys can see that the 130 or even not even the 130. Yeah, we can look at the 130 call. The 130 call is trading at 2.0, and if this were to go in the money within a month, like within 1 month, right, this contract can go from $200 to trading at $1,100. This is the beauty of really catching these rotation plays. So if this double bottom were to basically play out, this would and it goes over here. This would basically provide you with, with 500% profit on this trade. And you can have your stop loss right here. I know a lot of you asked about stops. The more you grow as a trader, the more strategies for stops you're going to learn. So there are so many ways you can have a stop. First of all, if you don't want to have a tight stop loss here, right? If you don't want to get shaken out by market makers, you can have a stop below the recent structure, below the recent bottoming structure, and you can exit there. Or if you really want to be safe, you can even have your stop a little bit below that, so that you lower the chances of getting your stop loss triggered if they do try to hunt anyone that has stops around that level. But yeah, with stops, like for instance, in this trade, with your stop loss at 103, and your entry around like 109 to 105, you are looking at your first profit target at 115, which already gets you, if you sell one contract there, that's already a great amount of profits for you to be up like 100% or something. And then if it goes to your profit target here, then we discussed how much that'll be. And that's how I swing trade, you guys. And I'm telling you, it's been phenomenal, you guys. Just looking at rotation, especially, it's been really great. I really love the new alert system, the way that I follow rotation, and I think we're gonna do significantly well. Someday our members are going to be very, very rich off of some of these, because I'm telling you, like, if I'm not overthinking it in my head. For example, if you guys are profiting, right? If you guys are making crazy profits and stuff, you're gonna mess up in your head, and you're gonna be all over the place. Where sometimes the market is not even doing anything, and you're just gonna so overwhelm yourself because you're up so much, to the point where you give back to the market because you just couldn't handle it. Like within you, which is all in your head, could not handle it. And me being in the position where I'm like, you guys just trust me on this. This is where the rotation is. This is where you're gonna have your defined stop. Then you're gonna be you're going to be confident to take these trades, and not be like, oh my God, if I take this trade, it's going to be bad. No, you're just literally following what the rotation flow would be, and with the understanding that you have a firm stop. But yeah, team, so far, do our team understand where rotation flow can go into? Would you guys like me to also mention the stocks? How do we feel so far? Before I move into other things. I know there was a lot of questions about. I noticed there was a lot of questions about stop losses and position sizing, and we're gonna talk about that too. But first, I want to talk about, like, do we know all of the stocks that we're gonna buy this week? So you guys know we want to buy, I left some notes earlier, we want to buy QQQ, 345 puts for July 21st. Make sure you guys write that down or add it to your watch list. QQQ, July 21st, 345 puts. So team, keep in mind, while shorting tech, the plan is to accumulate long-term positions on financials that will benefit from the FOMC rate pause decision for a super high certainty of, basically the being mentioned or being confirmed into the July FOMC meeting. So going into July FOMC meeting, we believe the Fed is going to raise rates potentially. If they don't raise rates, then that's even better for the market. But if they do raise rates, we believe what is going to keep the markets calm and keep especially the financials calm and rather psychologically seen as an opportunity is the fact that their narrative is going to be that we are going to pause within the next, which is the July one. So sorry, we have one in June taking place. In the June one, they're going to set the stage up to pause rates in July, and that is when financials are going to greatly benefit from from the rotation flow. So make sure you guys also keep an eye out on that. I think at that time, as we mentioned, you guys way earlier in the S&P 500 analysis, at that time, because the Fed is going to pause rates, we believe not only financials is going to benefit from it, but we will see IWM benefit from it. IWM, which is small cap stocks. Small cap stocks benefit from low rate environments, or any sort of environment that is heading towards that, or even if it's just the illusion. I know some of you will try to be like, oh, it's not going down, blah blah. I'm just saying this is the illusion, and sometimes this sort of pricing in is is kind of it's seen within stocks, within price action, and I think this is what's going to happen. So rotation is going to flow into that. We're going to see tech going up. We're going to see the Dow Jones going up, and that's why we believe that we're going to get an all-out in sync, all indexes going up within the next couple of months because of the potential Fed pauses. But yeah, this is what we believe. So short term, we are going into FOMC, so you should expect some pullbacks or some rotation flow going from, let's say, from this area to this area, which we already discussed, and I'll discuss it again. For example, we're expecting rotation to go from tech into let's say XLV, XLE, and XLP, which is consumer staples and so forth. So some of the tech stocks that are going to see rotation: Meta, QQQ, Nvidia,